The 13 weeks liquidity forecast is really a cornerstone to any corporate restructuring project. So in this video, join me for an in-depth walkthrough of how this chart was built in Excel. So here we will contrast the overdraft facility with the liquidity and a buffer to derive the maximum gap in short-term liquidity, as you can see right here on the right-hand side. So let's have a look into how this liquidity chart was built. As you can see, there are three main inputs. That's the closing balance, the buffer, and the overdraft facility. This line here is just a technical helper line to make sure that, well, I only show this label here for the overdraft facility once. And as you can see, the buffer and the overdraft facility are constant anyway, so that's not particularly interesting. But the closing balance is, so the blue liquidity line that you can see here, and that really varies. So let's look deeper into where this is coming from. In this, tab, we have three sections. We have the cash receipts, we have the cash payments, we have, this contrasting of the cash receipts and cash payments, and we have this section to put together the chart. Now the closing balance is calculated up here, and it is in fact the sum of the opening balance and the cash balance, where the cash balance is the delta between the cash receipts and cash payments. So here you can see that we need to pay more than we get in. This delta 107 results from this. And this opening balance here for the very first week is coming from the accounts tab. So as you can see here, that's the sum of all these three values from the current accounts, where the last one is the overdraft facility. Now you may wonder, why is this third value included here? Because remember the financial status? Well, we started out with just the first two. In the end, that doesn't make that much of a difference. It's just a different way to show the overdraft facility here. And that's why we do it like this. Remember, over here in the financial status, we didn't show those 3.2 in, overdraft facility. We just showed the available overdraft facility. So here, when you see this 3.2, it's just a coincidence that this is also 3.2, doesn't have anything to do with that other 3.2. So back here, let's have a deeper look inside that. And I think it's most interesting to understand a bit more where the cash balance is coming from. So the cash balance, as I said, is the delta between the cash receipts and cash payments. Here you can see on a weekly basis that we first calculate the booked receivables. As you can see, they only reach some 4 to 5 weeks into the future. And that's because you usually have a horizon in which you need to get paid of 4 or 5 weeks, so something like 30 days. And that's why this fades out over here. The same thing, is applicable for your book payables. So this also fades out here. There's some noise over here, but you can see this really drops from week, 4 to 5. And, let's have a look into each of these. For the booked receivables, I'm working with expected values. The external receivables are not that important here really, because this is a B2C business and customers directly pay at the point of sale. So there's no invoice and there are no booked receivables. So this is just some, side business, let's say, from old-fashioned, selling off their old collections. And, here I just go with 100%. I think that's fair. Then for the intercompany receivables, here I'm assuming 85%. That's because, this is part of the problem here really, that the wholesale business needs to sell off their receivables through factoring so that it can pay the retail business. And I'm assuming a factoring fee of 15%, which would then give us 85%. Other than that, I'm assuming 100%, so I assume that they can afterwards solve these problems of getting paid themselves. Right down here, we have some input from the integrated business plan actually. So these are things that you don't have at the very beginning of the project, because usually first you have to calculate them. Sometimes you can also use inputs from the client. But if you really want to make sure that everything is consistent, it's just best to, well, after a couple of weeks when you have your integrated business plan, to go with your own numbers. And here you can see that, for example, sales only start in this, well, second week after the due week. And that's because, well, up here we have the booked receivables, and we shouldn't try to pour in the sales as well. So this is not clear cut really. You need to talk to the accounting department here what makes sense, when you should start pouring those sales in, how you should put them in. So here, just assuming 2 weeks of a gap between the booked receivables and when we need to consider additional sales. But really, this is individual and you need to talk through this on a case-by-case basis. Now, let me just quickly jump in here. Actually, for old-fashioned retail and sourcing, it is clear-cut. And that's because, well, they are B2C business that's selling through stores. So there is no time gap here in the sales versus the receivables, really. Here I mentioned that these external receivables are not part of the core business because it's from selling off old collections, a B2B business, if you will. But really the focus of this case is the B2C business of old-fashioned retail and sourcing. And that's why here we only consider those, well, sales through their stores. They start out here, and basically this is, well, you will see that later in the integrated business plan, the sales from January. I need to make sure that, well, we get this right on a weekly basis. I'll also show you later how to do this. But the thing here really is that, well, there is no real gap here. So I'm just assuming an offset of 1 week. And that's just because I want to make sure here that we properly separate the December from the January, as this is kind of a special case here because it's the end of the year. Other than that, we have other operating income and loans taken out, which are not relevant here within the next couple of weeks. So we can move on to the booked payables. Technically, it's kind of the same as for the receivables. So I think, well, I showed that in the last video, how we put together those 3.2 million in the external payables. And here you can just see those on the timeline. What's more interesting is down here, the input from the integrated business model again starts with the material expenses, personnel expenses, and so on. And also here you have to distinguish between two things. Do we send out invoices or not? So for example, personnel expenses. Well, your employees don't send you an invoice here, so it's the other way around. Does someone send an invoice to us or not? For material expenses, that's usually the case if it's not cash and carry. But for personnel expenses, it's not, because your employees don't send you an invoice. On the other hand side, for other operating expenses, I assume there's an invoice as well. So that's why we have those, well, non-zero values over here that I'll just explain in a second. And here we also need to make sure that, well, we pour those in. So as we have some booked payables, we do not want to start with these values down here, but just after a couple of weeks. So for example, for the material expenses, I assume that we start in week 4. Well, this week 4, actually, here it's a coincidence that we're starting at the beginning of the year. So, well, this is calendar week 3, but, well, it's 4 weeks into the future. So that's why I put this another timeline up here. Same thing for the other operating expenses and interest payments. Well, for the interest payments, you could argue that, well, you would not need to move that. Well, but then it doesn't really matter that much here. It's just small value. And for the taxes, I'm assuming some 12 weeks. Well, that's a simplification really. So sometimes you also pay taxes on an annual basis and then you pay in April or something like that. I think that's why I went with those 12 weeks here, but it's really not that important because, as you can see here, for example, we do not pay any taxes at all. So that's a good thing for us. And it means we can move on to the third section here. We have the cash balance that we just calculated as a delta from those cash receipts and cash payments. The opening balance I just explained as well, and we just do that on a weekly basis now. So we always calculate the closing balance. The closing balance from the previous week becomes the opening balance of the next week. We calculate the cash balance for the current week, calculate the closing balance as a sum of these two for the current week, and so on. It's not that complex actually. The overdraft facility here is constant. Next thing we have is the free liquidity, which is just, well, the difference between the closing balance and the overdraft facility. So also again, when you look into the financial status, this is a different perspective. You cannot see this overdraft facility of 3.2 here as explained before. And this can be confusing a bit at times, but well, in the end, the key message is the same. It's just a different way of looking at it. Down here, we have some more things that I calculated. So for example, the free external liquidity, for which I just take the free liquidity as such and cancel out the intercompany stuff. Down here, we have the buffer of 1.2 million, which is here 2 times the payroll, which is an arbitrary assumption, but it's, well, not too uncommon to do it like this. And then this eventually gives us the free liquidity after considering the external buffer. But again, so here in the chart, what we will be using as the closing balance primarily and the buffer and overdraft facility. So as you can see here, the closing balance is coming from up here, and what I calculate down here is more, well, for your information. It's not required for the chart. Now next, let me show you where all of this data is coming from. So basically there are two sources for the booked receivables and booked payables. We have kind of the same structure, and then for everything that comes down here and down here, well, we'll actually have a look at the interface for the first time and see what it's good for and also why we need it, and we just can't right go for the input tabs. But let's start with the booked receivables and payables. So here you can see where the booked receivables are coming from. You probably remember from the last video on the financial status, this table on the payables, and well, for the receivables, this is just kind of the same, just less complex. And well, this data comes from this input tab. We prepared these payables over here for the financial status, and well, the receivables come pretty much in the same format. So this is where this part is coming from. And now it gets a bit more tricky, really. So, well, these things coming from the interface are coming from this tab. And let me explain this to you. Well, the integrated business plan is on a monthly base, while the liquidity plan is on a weekly base. And this is the first problem that we need to deal with here. And this is also why you can see up here several helper lines. And I will go through these later and explain why we need them. Here the basic idea is to get, well, several line items, especially from the income statement, and also some deltas from the balance sheet, and well, put together the cash in and cash out that is implied by these. So for example here for the sales, well, they come from this input tab over here, which is the base plan from the integrated business plan. And well, as you can see, there's a lot of stuff in here, and we need to first make sure that we get what we really need. So let's go back. There are 3 more sources here that we need to get. The first one is for the loans taken out, the loan repayments and the interest expenses. The second one is for the personal expenses, and then eventually we have another one for the investments. So let's first have a look at the bank loans and interest expenses. So this is coming from this tab. we already know this accounts tab from beforehand. Well, down here we have the loans, and here they come on a monthly timeline. It's important to point out that we cannot readily use here what do you get from the balance sheet. We need to separate, well, new from existing loans, and we also should, well, point out these repayments separately. Other than that, we have the personal expenses. So they come from this tab, which is the payroll. Well, here you can see for the store staff, an entry for everyone who works there. The same thing also further down here for the store managers. I assume that we have one store manager for each store. And there are also some area managers and some other folks around, like for example, the C-level assistants, IT, HR, and finance and controlling. And for everyone, we have the salary, we have the social contributions that we need to pay. And it's also important to look at the FTE, so not everyone is working full-time. So this brings us down to the last input, and that's the investments. That's this table, something the client can usually provide you with. Here we can see that, well, Old-Fashioned is investing in new stores, which each come at a cost of 400K. They have a useful lifetime of 10 years, and they plan to open a new store every 3 months, that is once a quarter. Also down here you can see the depreciation schedule for this, and also the net investments, but these are not relevant here. So let's build this liquidity plan. And to do that, well, I'll go here to the final version and just copy all of this. And then I will go here in the version that we're working in. I will make sure to copy the columns or copy the formats. And well, let's paste the formulas actually. There will be some problems here. And well, I'll go with yes to all to use the versions that already exist in that workbook. Well, for this as well. And here we go. So this gives us this, obviously. We'll build this, we'll not use this. So let's delete all this. And well, these you can keep. These are constants. Otherwise, I think there's no way still in Excel to column, well, row heights. You can copy column widths, but no row heights for whatever reason. So we'll stick to that. And here this seems to work. Let me check what you have here, if there are any problems. Doesn't seem to be the case now. Wait. Well, I just copied two things that were not defined so far in here. So let's delete these for the moment. And no, here we go. Here we have some problems now. Well, so you know what? Let's delete these as well, and then I think we can take it from here and build this. So let's get started with the booked receivables. And I'll just get the formula from the other workbook up here. And then I'll explain. This is nothing too spectacular, really. Let's see what this is doing. Well, actually, it's not doing anything at all at the moment, because this just tells us that we first need to set up this table over here, which we haven't. For the payables, we already did that when putting together the financial status, but for the receivables, we don't have that as of now. So let me get the formatting here as well. Column with formats, and I'll also paste the values now. Let's go with formulas instead. Yes to all. Yes to all. Check if there's a problem. No. Okay, so here we are. Let's put this to 20. And now I'll again, well, remove this as I want to explain this. Well, so the first thing that we need now are those external receivables. And we will just, well, like we did for the non-deferred payables, look this up in the respective tab. This is just working the very same way because, remember here, these payables and these receivables are coming in the same format. So why not reuse this formula? Actually, I will just copy this and paste it in here. So obviously this doesn't make too much sense. We should modify this formula so that, for example, we sum from the receivables and not for the payables, and also for the conditions, of course. So let's open the text editor, paste this here, and we'll replace in pay with in rec. Let's go with replace all, and now we have this. There's one more thing that we need to do though, and that's checking those ranges here. I think these receivables are not that long, so it's just 1179. So let's modify that before we use the formula here. So I will replace those 1485 with some 1179. Replace all, and now we have this. Well, let's close this and copy this here. And now we get those 178.5. I think that's also what we get in the final solution. So why not copy this? Now we have this. We can sum this up. Paste it in here. And here we go. And now we can go back to the liquidity plan, and now here we can see a value that's being looked up from that table that we just built. Well, I don't think I need to do this and show you how to do this. This is just a very basic index match statement to look this up. So let's copy this. Here we go. So these are really just these values. Now we need to sum them up. And the next thing we need are those expected percentages. So again, here I will just get these as values from the final solution. We talked about that earlier, where we have those 85%, for example, due to the factoring. So now we can calculate those expected receivables. For that, I'll first be using a sum product formula, or like this. But I also wanted to show you that this can in fact be written differently. So actually just what it's doing is multiplying these two arrays here. And if you do it like that, it will naturally spill over. So we can just sum the whole thing up. And this is just the sum of an element-wise multiplication now. So, sum product eventually is just a matrix wrapper function, and it could also be just written like this. So let's copy this. And we can now move on to the booked payables. Well, actually, this is not really that spectacular or interesting, so I'll just get these formulas from the final solution. Here we go, and I'll copy these right over here. Let's sum those booked payables up as well. And now we have this, and now we can build the interface tab. So to do that, let's again first get those formats and so on from over here. So I will just get this. Paste the formats, paste the column widths. Well, let's paste the formulas and see what happens. We already know that. Let's go with yes to all. Check if there's a problem in the name manager. Doesn't seem to be the case, so we can close this. And now we have this. Obviously, we want to build this ourselves, so I will just remove this. And also up here, these things we should build for ourselves as well. The rest, however, I think we can just keep. So this is just a Monday through a Sunday timeline on a weekly base. It's important, that we here start a bit earlier than in the 13 or 14 weeks that the model is actually focusing on, and that we have a bit more space here at the end as well. But other than that, it's pretty much the same. And as usual, I like to fix this as well. One more thing though, I just noted that in fact here, as I copied those formulas, we have those workbook links, and that's something that we definitely don't want around. So let's break them all and make sure by the way, also that there are no queries or connections, but there shouldn't be any. So this now gives us just these values, and we can take it from there and build those formulas now. So let's first get what we need from the income statement. Let's start with sales. We'll go over to the base plan and get those values from the monthly timeline over here. So let's put together an index match statement for that. Make sure to use column B for checking the ID. Column A is actually something that we'll use in the integrated business plan, but not here. Get these here right. I'll just press enter now because I found out that if I want to avoid having to remove the worksheet name, I can just do it like this. And now we have the first problem because, this here kind of seems like end of December, but it's not. So, I'll hit enter and this will not work because up here we always have the last date of the respective month. So, we need a helper line here. So I will put together a date. We'll go with the year of this. Let's also go with the month of this, but let's increase it by 1 and then go with the 0th day. So actually what this does is, it moves on to the next month, January in this case, but then it takes the 0th day of January, which turns out to be the last day of December. And going with the 0th day is one option to identify the last day of the previous month. So that's just what we need here. So I need to move this one cell up, and here we go. Now, before I can copy this, I should first copy these. So let's get those formula and these, and here we go. So now, here we have the sales for January. Obviously, this doesn't make too much sense because we're now on a weekly basis here, and we just got this 4 times. So we want to make sure to properly divide this by 4, for example, but it really depends on the number of weeks that you have within a given month. So sometimes that's also 5. So let's build a count if statement up here. And check for each of these dates how often they are in there. So as you can see here, there's just 1 date from November. There are 5 dates from December, and there are 4 dates from January, and so on. So we can now divide by this. And this then gives us, an equal distribution across the weeks for the respective month. Now we can reuse that formula for the other, income statement items, other operating revenue, material and services, not personal expenses though, because that will be coming from the payroll. Other operating expenses, interest expenses, and income taxes. So here we go, and that's already been the first step. So next we can take care of the loans. And those loans, let me get them from the accounts tab. Over here, as you can see up here, we have the bank loans from the balance sheet. But we are not just looking for the bank loans as such. Actually, what we are looking for are, new bank loans that were taken out. And here you can see an example with Bank D, which just took out another loan. Here by the end of the month October 2023, these 3 million. So we should get that, and I already prepared this down here. Let's say it came from the client. And also down here we have the repayments. So you can see this is going down by 100 each month, and here we're going down by 300 each month because we have that additional loan. So let's get those new loans taken out. Here we have the IDs. Make sure to start in column R, not in column P here. And this gives us then this. Now I can fill in the IDs. And this gives us a bunch of zeros. Now let's check, but I think that's just right because there are no loans that are taken out. So as we can see here, well, end of 2023, beginning of 2024, well, there are simply only zeros in here, and that's why we get zeros here as well. Other than that, well, there's a small problem now, because we don't want to take out these loans every week, of course. And this time it's also not about splitting, well, the loan taken out across the weeks of that month. Actually, we want to assume that we take out the loan by the very end of that month, which is the most conservative assumption, if you will. So we just assume that we get that money in at the latest day of that month. And to build this now, we need to identify the week within that month. So up here, well, I said that we have 5 weeks within that month. So in this case, December 2023. But here what I really need is, well, I need to count upwards. So I would need something like 1, 2, 3, 4, 5. So let's build this. And for this, well, I'll show you how to put together a bit of a special count-ifs formula, because this criteria range will be dynamic in size. So let's fix this, but don't fix the second part of this formula. As a criterion, we are going to be using, well, just what we have in here as well. I'm just fixing the row here. Well, actually, I don't even would have to. I can fix that as well, but really doesn't matter. And here we go. So now I just started counting here 1, 2, 3, 4, 5 for the month of December 2023. And now for the loan to be taken out, we just need to, well, get the last of these 1, 2, 3, 4, 5, so the 5, and compare it against these 5s, so that, well, we identify this column in this case because it's, well, the last week of that month. And just over here, well, we would need to identify this column here with the 4. So let's see how we can do this. And actually, let me just reuse what I got in here. So let's head right down here and put in a condition. And, well, you can use if statements to work with conditions, but another way is just to multiply by something. And if that something is a condition and it evaluates to true, then, well, that's equivalent to multiplying by 1. If it evaluates to false, then that's equivalent to multiplying by 0. And that's just fine here with us because, well, if this evaluates to false, then it just puts in a 0, and if it evaluates to true, well, then it just gets us that value that we are looking for. So let's do this. I will put in this, and now we need to make sure that we actually will identify the last week of that month. So in this case, we are looking for 5, but we don't really know beforehand if it's a 4 or 5. So I will go with a max if statement. So we need to check, well, in here. And the criteria range is gonna be this one. And that's because, well, we are only looking for values up here in the green section, where the, well, section down here is actually the state. So let's do that. So what this will give to us is then, well, it's gonna slice out these here, so meaning these here, and the maximum out of these 5, well, that's just the 5 that we are looking for. And that 5, well, turns out to be what is returned up here as well. So it just counted, well, in here up to there, that this date showed up 5 times. So let's hit enter, paste those formulas. Actually, this is not the best example to show this because, well, we get still zeros because there are no loans to be taken out around here. So, well, let me just check over here where we have a better example. Why not go, for example, with the end of July 2024? So let me see where I can put this in. Here's the start date. Why not put this in here? Let's check for some Sunday around that date. So I will just go with the 28th. So that would be this date. And now this gives us, well, those 2.4K down here, as expected. Well, I can also show you what happens if I put this like 2 weeks earlier. So this will then shift this here right to the end of that month. And this just leaves us with one more thing that we need to deal with, and that's the sign. So I need to multiply this with -1, in fact. And the reason for that I will just explain. Well, up here we have the cash ins, and these are all supposed to be positive. And down here we have the cash outs, which are all supposed to be negative. Now the reason these already come with the right sign down here is that, well, in the income statement, these are cost positions. While, for example, here's sales, that's not a cost position, it's an income position. So it comes with a positive sign. For the balance sheet, I only work with positive signs throughout the entire course for both the assets and the liabilities and equity. But here the loans are taken out apparently came with, well, a negative sign. And, well, the reason for that is that I think it's because of this. I made this, well, consistent with what we get over here. And here, well, these come with negative signs for the loans because, well, the overdraft facility comes with a negative balance in the first place. And I just wanted to be consistent here, so every now and then we just need to make sure that we get the sign right. But that's the reason here. So now this should work. And, well, let's get back to the initial starting date here, which also removes those 2.4K from over here. Well, now we can actually just copy this formula down here to the loan repayments. Let's do that. And as you can see here, this now comes with the right sign, so it's negative because, well, it's cash out as we need to repay these. And then we can move on, I think, with the other things. That would be the personal expenses and the investments. And for these, we have 2 separate sources. So the personal expenses we'll get from payroll, and the investments we'll get, well, from the investment tab. So I know this must have sucked a bit because, well, really working with some free helper lines is not what we want to do if it's possible. And I can assure you that this actually is the technically most nitty-gritty part in the entire course. So something like that we will not have again here. It's just because, well, we need to map from the monthly format to the weekly format. And that's why it gets a bit nitty-gritty here. But other than that, I guess we are done with the worst part technically. So let's move on to the personal expenses. And actually here I can show you something about the index match statement. You know, usually it returns an individual cell, but it can also return a vector, so an entire column, for example. And that's useful if you want to sum this up. Well, here over in the payroll tab, we actually have these, well, payouts on a weekly base. And we need to get, well, the right column given a week. And then we need to sum that up to get the personal expenses here. So let's see how we can do this. And I'll head right over here. get the array right. And now I will in fact skip this row part. So I will just go for the column up here. Like this, hit enter, won't work so far. But this means that I don't have to, well, remove the worksheet name. So let's get this. And now we got this. And actually what this is, well, it's a sum over a vector. As we can see here, there's a lot of stuff in there. And this just, well, sliced this matrix over here, so that whole thing, I think it even goes a bit down further here. It sliced that whole thing by, well, by week. By this week actually, that we were looking for. And then we can just sum this up. And that's just what we are looking for here. So now we can convert this from euros to K euros. And we need to make sure that it's actually negative, because it's a cash out. And well, the input data came in positive numbers. Here, well, you may have noted that I'm putting this in parentheses and I'm writing a 1 and so on. Well, of course, you could also do something like, well, for example, that. But, well, this is so hard to read. I can't even select it. Please don't do that. So always make your formulas as readable as possible. And that also sometimes include doing things like that, which may not make sense at first, but I think it's just much easier to read. So let's go with something like that. And now we got those personal expenses. Means also we can move on to the investments next. These are what come from the investments tab, which are again on a monthly timeline, so we need to take care of that. Please make sure not to consider the depreciation. Depreciation is not something that's, well, having a cash effect. So we are really just wanting the investments. Let's look them up. So we can just use this here. It's the sum basically. Use these. And well, for this match, I can just go with that date. Wait, it's not working. Why is that? Actually, note that the investments only start in January 2024. And that's because the case kind of is taking place, well, between the years. So January 2024 is actually the very first month that we'll be planning. And that's why we don't have a value, well, for that December. So let me just copy those formulas here. Also, I will make sure that these values come in a negative format. And, well, let's see what we can do here. I think, well, as we just don't have that, it's really a special case. So sometimes if something like this happens, well, the logic over here in the investment tab is actually that we invest in a store every quarter. So we open a new store, or are about to open a new store every quarter. So let's just put that in here as a hard block. Sometimes it's okay to do that. Let's highlight this in yellow so that we can see that there's a break in the logic. Let's add a comment, and well, let's put something in like hard block due to special case before planning horizon is starting, something like that. Because when you do this a couple of times, you will just not remember why you did this, so it's best to comment it and highlight it. And now we just need to do one more thing, and that is here. Well, we have this value now 5 times because, yeah, well, it's coming from our monthly timeline. So let's take care of that again. And also for the investments, let's assume that it's like with the loans taken out. so that we do these investments at the end of the month. So I'll just get, well, this part of the formula up here. I will paste it in here, make sure to multiply the 1. And now we just get, well, this at the very end of that first quarter in 2024. Guess what? That's already been it for the interface tab, and I've already jumped back to the liquidity plan. So, well, let's get those formulas for filling in these, well, values from the income statement and so on. So I will just get them from the final version. I don't think this needs much explanation. So this is a basic lookup. It will get the value from the interface tab that we just prepared. We have, well, this actually over here, which I should get as well from the final version. And which is gonna be this 2. So that's, as explained, this conservative little shift here that we apply. So we have this. Let's do the same thing for the cash payments. I'll just get these. And I'll also get the shifts. And now we got this. So, well, the formula is almost the same as up here. We just have again this -1. Sorry for that. So in fact here, well, I'm going with positive numbers throughout. So all of these are positive and all of these are positive. It's a bit of a hackmack, but yeah, this here was the way it was done when I prepared this. So let's keep it consistent, I suggest. Well, let's sum this here, by the way. And this too. Okay, so now that we get this, let's calculate the cash balance, which is just, well, this here minus this here, which tells us that we will have more spendings than we get in, and this is why this is negative. The opening balance is something we can get from the accounts tab, and that's the sum of these 3 cells. Note that here we include this, well, overdraft facility as well. Closing balance, then, well, that's the sum of the 2. And now we need the new opening balance, and well, the new opening balance is just the old closing balance. And the closing balance formula, well, that's the same always. So we got this. Now the overdraft facility, you may remember as well that this was just coming from here. So let's get that. I should properly dollar that as we are about to copy that. Now for the free liquidity, this is really just the difference between those two. So let me calculate this as this. So this is now a positive number because here we have a bit of leeway still. Also, let's calculate the free liquidity external. So let's cancel out this intercompany stuff because it's something that, well, is more or less under our control within the group. So, well, it's not that critical. And I'll keep this simple, so I will just work at those. And I will get those. I'm not winning a prize for the formula, but sometimes it's better to keep things simple if it's possible. And well, then this is just, well, this is actually a bit tricky. So we have this. And now we need to subtract what we could get. And we need to add what we were supposed to pay, but then don't pay. So this gives us this. The buffer, well, let's go with a constant. Let me check how I did this over here so we can make this consistent. I call this liquidity buffer. I'll also put it down here. And well, I'll just get these. Let's define this. Actually, if you're wondering what's in here, well, let's see, that was this NA value. Not sure at the moment where I used this. This IC flag, empty. And well, this was coming from the offsets. So actually here, I think I use a constant for this that as well, but it's really not that important. Let's keep this simple. Now we have this, and well then we eventually have the free liquidity after the external buffer. And this is just, well, this. Now I need to pay attention. I need to add this. Well, because it's getting worse. So we have this, and now we can, well, yeah, look this up over here. So let's do that. I'll fix these a little. We will look, well, this here up. Fix this a bit as well. This is going to be a lookup array. Go with an exact match. Then this gets us this. Let's copy those formulas. And actually for the label, well, I just want to show that at the very end. So if you remember this chart from over here, well, I don't want minus 3.2 all along the way here, so just at the end. And one way to do this is just, well, to go with NAs. Like there's a formula that is nothing more useful than to produce an error. And here I will just get this, well, very last value. Also, here you may have noted that I was actually going for millions, so let's do that. And now we have this. And the last thing that we need to do right now is just to build this chart. Now I think it's easiest to explain this chart by starting from the results. So let's go here into change chart type, which actually gives us this window where we can see where this chart is, well, configured. It's a combination chart. And well, it comes with several things. I don't think I can make this any larger, but so let's give it a try. We have this closing balance, the blue line up here. Then we have, well, another closing balance as a stacked area. Actually, this is formatted in white. So, well, it's there, but you don't see it. And the reason it needs to be there is the buffer, because the buffer is a stacked area as well. And as we want to put a buffer underneath the closing balance line, well, we first need to stack the closing balance itself as a wide area so that, well, this starts where it's supposed to start. For the overdraft facility, it's not really that complex. It's just a dashed line. And, well, the label, I also get this separately, and then I think I more or less hide it and just show the very last thing. Let's see how this is working out. And this also means for us that what we need in here is a combo chart. So, well, why not start with these values and insert a recommended chart? And I think then I can go all charts combo. And then we are here. Guess what? I needed to do this again, but I will show you just now how to do this. So let's start with the closing balance, and the closing balance is just a line. Well, then the buffer, well, first we need another closing balance as a stacked chart, area start chart that is. So, well, for the buffer now, let's define this as stacked area anyway, but we need to put in something here as well before we can use it. And the overdraft facility, well, line is just fine. Secondary access we don't need in this chart. So let's insert this here. Well, this doesn't look too good, but let's do the formatting later. And first get some more data. So let's add another closing balance. Like this. And we need to shift that up a bit so that it's coming before the buffer. Is it okay? Hit change chart type. I think it's the easiest way to access this. even though we don't want to change it. Let's change this to stacked area, and this gives us this. So now we can remove the fill. Already looks a bit like what we are looking for. And well, let's just format this and see where this is going. So here I think we want to go with something dashed. More fill colors. No, that's not where it is. I think it's a bit hidden. So let's go format data series and then here fill. And here we can go for the pattern fill actually. So let's use one of these. Not sure exactly which one I use, but it doesn't matter that much. So something like this. Well, it really seems to be the case, by the way, that you can't access this from here. Not even here. Well, either way, then we need to do it like, format data series. So the next thing is this line up here. Come on. Let's see if I can at least properly edit this here while this works. Also, I think the weight is way too heavy. Let's go with 1.5. Some labels actually would be nice. Well, I think they need a bit of fine-tuning. Let's format the data labels. And, let's go with above. I think this should work. Other than that, we have this. Well, let's use this red here, which is not part of the theme as such. We'll go with some dashes. And let's also reduce the weight to 1.5 as we have for the blue line. And now, actually, let's first remove these here. Now what is missing is the label for the overdraft facility. Guess what? I just added the label for the overdraft facility and I couldn't see it. So I need to do this again. And here I will show you what just happened. Well, it's because of all of these NAs. While they are useful, they are also a bit unuseful. So as you can see, I just added this and I can't see it. So why not put something in that we could actually see, like this, for example. And as you can see here, now we see it. And now we can also format it because we see it. So let's remove the outline here. But at the same time, add data labels, which is important because we want to see this -3.2 here in the end. Other than that, I can now, get back those formulas. And here we have our -3.2. That was just what we're looking for. Let's format this a bit. I'll go with something like this. I make this white. And also I like to change the shape. While keeping the other formatting, of course, it is. And now we have this. Also, this seems to come with a shape outline. We should remove that. And, I think if you click twice, you can edit it a bit more. Now this looks like something that could actually be useful. Let's remove the chart title. We will put that in PowerPoint somewhere else. Also note that here this 1 through 15 is not exactly what we are looking for. So let's here get the proper timeline. I think it's up here. Maybe copy this. Let's see if this is working. Much better. But there's still something that I don't like, and these things seem to have shape outlines and whatnot as well. So this is gone. I also like to remove the shape outline of the entire thing, so we have something like that. And here, I don't think that axis is really useful, so let's get rid of that. Also the legend, let's do that in PowerPoint. It will look better if we tweak it there. And let's get the size right again. So first here, I think I also should change that. So I think I go with Jill Sans Nova in PowerPoint. Not here, here it's always Arial. Let's make this bold and let's set it to 14 maybe. Oh, that's too large. Either way, let's tweak this a bit later. I think the idea is clear, but it's important to get the size right. And now I need to zoom out a bit, otherwise it's too large. We have something like this and all. So now I understand why the 14 actually made sense. So we have this, and for some reason this doesn't like to, well, stay the way it is. So this now, well, doesn't look quite the same, but I think that's because I, prepared this chart actually separately again for the PowerPoint slide. So I think this is actually closer to what we have in the PowerPoint slide. If you really want to know what the difference is, I think here I went with 50 to make this a bit more gray. And I think this area down here looks slightly different, and that's because, I used over here a bit of a different scheme, but it's really not that much of a big deal. So as you can see, these like to change all the while. I don't know why, but that's it for the liquidity chart.